Hey tech aficionados, welcome to the Thursday edition of Tech Stocks Daily Podcast. Buckle up because we've got a lineup that's hotter than your morning cappuccino. First up, we dive into Baker Hughes, raising dividends and expanding tech with Saudi Aramco. Then we'll talk Microsoft. Their earnings are up, but a cloudy forecast shakes things up. IBM surprises investors with a stock surge, courtesy of their quantum and AI ventures. Finally, we'll peek at Apple, consistently beating Wall Street's estimates and rocking its tech ecosystem. Excited yet? Hit play and hang on for an electrifying tech news download. All right, folks, gather round for today's sizzling tech scoop featuring Baker Hughes. The energy technology giant is making mad waves and popping up everywhere on our radar with a barrage of exciting updates hitting the news front, like a triple espresso shot in your morning latte. First up, cha-ching. Baker Hughes just declared a generous quarterly cash dividend of $0.23 per share for its Class A common stock. Investors, you may now clap. This isn't just any dividend bump, folks, but a thrilling 10% increase over the same quarter last year. It's like giving everyone an extra scoop of ice cream just because. Mark your calendars for February 11th, 2025 to be eligible, and then maybe pen a little love letter to them by the 21st when they pay out. Interestingly, they're planning to source these dividends from the cash churned out by their operations. Now that's what I call cash flow goals. Zooming past dividends, Baker Hughes is making moves across the globe. They have secured a crucial technology order for the third expansion phase of Saudi Aramco's Jafurah gas field. In a deal sealed with Technicus Reunidas, they've been tasked to supply a set of jazzy gas compression trains and propane compressors. The gig was locked in during 2024's fourth quarter, but is already humming excitement across the Saudi deserts. Their advanced electric motor-driven compression solutions are set to make operations from the vast Jafurah field more efficient. Think of it like upgrading from a bicycle to a supersonic jet. And just when you thought they were done, they're teaming up with Venture Global on the home front. Baker Hughes has been tapped to crank out a modularized liquefied natural gas system, along with a multi-year services agreement to benefit the Plaquemines LNG project in Louisiana, USA. In other words, they're not just about providing the goods, but also about maintaining them with top-notch care. It's like having a continuous VIP pass in the energy tech world. These moves don't just strengthen their long-standing relationship with a mega player like Aramco, but also demonstrate their strategic prowess in the ever-important LNG sector back in the States. With trusted partnerships banking over 100 million tons of annual production capacity, a feat as colossal as it sounds, Baker Hughes is setting the discourse on energy's future with predictably low-carbon, dependable solutions. So, what does this all mean for Baker Hughes? They're showing off their global dominance in the energy tech arena, with dividends to delight investors, tech orders to please partnerships, and ever-energetic visions for cutting-edge solutions. With more energy innovations dawning on the horizon every day, Baker Hughes is not just in it for the short run, they're cruising comfortably at warp speed. Keep your energy levels high and your eyes peeled, because there's surely more to come from this powerhouse. Microsoft has been buzzing in the tech news today with a host of earnings reports and industry insights capturing headlines. Let's break it down. First up, we've got Microsoft's quarterly earnings report for the fiscal second quarter of 2025, which turned quite a few heads. Despite stellar financial performance where Microsoft beat Wall Street expectations with an earnings per share of $3.23 compared to the expected $3.11 and revenue at $69.6 billion versus the $68.70 billion forecasted, the results were a bit of a mixed bag for investors. Why? Well, while overall revenues saw a 12% bump, Microsoft's forecast for its cloud business brought some stormy weather to the horizon. The company predicted slower growth, particularly for its powerhouse Azure platform. Growth for Azure came in at 31%, down from the previous quarter's 33%, and this deceleration made some investors hit the brakes. In response, Microsoft stock took a dip in aftermarket hours, falling as much as 5%. This slide is one reason why ETFs heavily invested in Microsoft, like the T-Rex 2X Long Microsoft Daily Target ETF, are now under the microscope. The report noted that Microsoft is leaning heavily into AI, even announcing a $13 billion annual revenue run rate from its AI endeavors, underscoring its critical role in the future landscape of tech. To further reinforce this direction, Microsoft plans to spend a staggering $80 billion on building more data centers geared toward AI workloads, a commitment to infrastructure aiming to handle the burgeoning demand AI products are generating. Despite Azure's anticipated growth slowdown, the results paint a picture of a tech mammoth still riding high on profitability. Gross profits were notably higher than those of industry peers, and though the return on equity was slightly under par, the overall scenario boasted robust revenue growth and powerful cash flow health. Adding color to this financial drama, Microsoft's management pointed out ongoing challenges. Significant expenditures on AI infrastructure and the integration of their Activision Blizzard acquisition have stretched operating expenses, pinching margins a bit. Notably, alongside diving into AI and cloud tech growth, comments around strategic initiatives were featured, such as integrating AI more deeply across its product lines, something bound to keep the tech community buzzing. Investors and tech watchers are keeping a close eye on this behemoth as dam builders witness those stock dips as potential investment windows. In conclusion, Microsoft's financial landscape shows a company performing admirably on one hand while navigating hurdles with the other. Transitioning its focus to expanding cloud and AI capabilities forms the crux of its story today. While facing growing pains, the company's commitment to investing in these futures suggests an anticipation of untapped potential ahead. So, whether it's tech triumphing or stocks slipping, Microsoft remains center stage, not just in the industry, but in headlines, showcasing their intention to lead the next wave of technological innovation. Greetings, tech aficionados. Let's dive into today's headliner, IBM, the tech titan, who has been creating quite a buzz. First up, we've got IBM stock making waves with a near 14% surge. Yes, you heard it right. The catalyst? IBM beat analysts' forecasts in their fiscal fourth quarter 2024 earnings report, with adjusted earnings per share coming in at $3.92, as opposed to the predicted $3.78. Revenue was slightly above expectations too, landing at $17.56 billion, albeit by just a whisker above the $17.54 billion forecast. Sure, it wasn't all rainbows and butterflies, as year-over-year earnings saw a dip of 13%, and full-year GAAP earnings took a 21% plunge. Yet, CEO Arvind Krishna sees the glass half full, shining a spotlight on IBM's generative AI segment, which is now valued at over $5 billion. That's an impressive $2 billion jump quarter over quarter. Clearly, IBM wants to remind everyone that they're not just your grandma's old-school tech company, but are very much in the AI game. Adding to the excitement, IBM has joined hands with Telefonica Tech for a strategic partnership in cybersecurity, particularly against looming quantum threats. This dynamic duo aims to develop quantum-safe cryptographic solutions to preemptively tackle encryption vulnerabilities. IBM is flexing its quantum muscle with tools like IBM Guardium Quantum Safe and ensuring that data stays inscrutably secure. The collaboration highlights how IBM is not only innovating, but also forming key alliances to navigate the stormy seas of future tech challenges. And the plot thickens further with IBM's optimistic outlook on earnings and robust software performance. Their software adventure saw a 10.4% revenue spike, driven by a solid Red Hat performance and a jump in automation revenue. Hybrid cloud and AI initiatives continue to be IBM's mighty steed, riding on the accelerating demand. However, the grip isn't entirely firm in other domains. Consulting services face some turbulence with a 2% revenue dip, thanks to tightened client budgets, and the infrastructure segment saw a fall due to cyclic dips in IBM Z revenue. On the financial dashboard, IBM's free cash flow remains steady at a cool $6.2 billion, serving as a secure launchpad for future investments and indicating IBM's solid financial positioning. Additionally, the company's confidence reflects in their projection of at least a 5% revenue growth for 2025, keeping stakeholders optimistic about the road ahead. In a nutshell, IBM is asserting its transformation into a modern tech powerhouse, balancing innovation with strategic maneuvers and comprehensive AI and cloud solutions. As we move forward, keep an eagle eye on how IBM tackles challenges in consulting and infrastructure, while galloping ahead with hybrid cloud and AI innovations. The Big Blue isn't just making waves, it's looking to make a splash in the evolving tech landscape. Let's dive into today's juiciest news from the folks over at Apple, which had everyone talking. First up, Apple has wowed Wall Street yet again with their Q1 earnings report. They've just announced a revenue of $124.3 billion, beating analyst estimates by just a whisker. Not only did they nail the revenue figures, but they also managed to impress with earnings per share of $2.40, coming out ahead of the predicted $2.36. This marks the 8th consecutive quarter that Apple has beat analyst estimates on both revenue and earnings, making us wonder if they have some secret ingredient they're not telling anyone about, besides rock-solid hardware and software, of course. Even though iPhone sales saw a slight dip, Apple's active installed base of devices hit an all-time high across various products and locations. This could mean that more and more people are diving into Apple's ecosystem of gadgets. Think of it as trying one piece of sushi only to end up devouring the whole platter. Tim Cook, Apple's head honcho, joyously declared it their best quarter ever, attributing their success to the magic of Apple Silicon and Apple Intelligence, which continues to enhance user experience. Oh, and a cash dividend of 25 cents per share was announced. So it's not just the products that are rewarding, the stocks have a little something extra for you too. Now in Apple's other headline, we have a little industry smackdown. Apple was pitted against its competitors in the technology, hardware, storage, and peripherals industry for a spirited analysis. You know you're top of the heap when your performance in market metrics like price to earnings and return on equity is being matched against the best of the best. Despite some cheeky notes about overvaluation through their price to book and price to sales ratios, Apple came out looking pretty posh. The firm boasted a robust EBITDA of $32.5 billion with higher than industry average profitability. Their debt to equity ratio positioned them solidly, striking a healthy balance between adventure and prudence. All these numbers may make your head spin faster than an Apple Watch does hula hoops, but one thing is clear. Apple's here to play, and they're playing to win. Even with slower revenue growth compared to some peers, their efficient resource utilization and earnings are smoother than a new iOS rollout. They've built themselves a financial fortress, yet there's still space to grow. Now it's your turn. What do you think about Apple's performance this quarter? Do you think Facebook and Google should be watching their backs? Or do you have some Apple stock in your portfolio sending you sweet, sweet dividends? Share your thoughts, predictions, or wild speculations down in the comments. Let's keep this tech talk flowing like an open app on a freshly charged iPhone. All right, stock market squad, let's have some fun and jump into the juicy deets of IBM. I'm going to let you in on whether it's time to sell, buy, or hold on to those tempting blue chips of Big Blue. Looking at the signs in today's news, IBM impressed us with that robust 14% surge in stock price following their fiscal fourth quarter earnings report. That's like grabbing a sparkling trophy while everyone's still in the game. The main drivers here are their dazzling performance in the generative AI segment, jumping $2 billion quarter over quarter, and the pivotal partnerships they're forming in emerging fields like quantum cybersecurity with Telefonica Tech. All of this hints at a promising cutting-edge future. IBM's strategic focus on hybrid cloud initiatives and AI, underscored by a 10.4% software revenue surge, keeps showing they've got tricks up their sleeve, making them a modern tech marvel, not just a relic from your VHS years. Their continuous investment into these high-growth sectors, alongside manageable impacts in other business lines, bolsters their long-term prospects in an energizing way. Still, let's sprinkle a little salt here. Some parts like consulting services and infrastructure did face tighter margins. But hey, I see these as blips rather than long-term dents, considering IBM's steady hand on their cash flow and strong investment posture for 2025. Drumroll, please. My humble recommendation would be to hold IBM stock. Why? Well, that uptick in AI and cloud business is alluring, showing lots of promise that could just turn you into a proud shareholder watching the company's transformation. However, given some current bumps they're ironing out, holding allows you to wait and see if those tech bets really pay off big, steering clear of FOMO-fueled knee-jerk reactions. Remember, folks, this is just one enthusiastic tech vlogger's take, and no two investors are the same. Always do your own deep dive and pantry raid for financial advice before any investment move. Hit up a trusted financial advisor, chew over these insights, and align your decisions with your own goals. Stay savvy and happy investing. In today's tech whirlwind, we saw Baker Hughes flexing strong global influence in energy tech, with boosted dividends and significant deals. Microsoft, despite posting strong financials, faced a cloud growth hiccup that ruffled a few feathers in after-hours trading. Meanwhile, IBM's impressive gains in its AI and quantum ventures propelled its stock to rise like a hot air balloon, positioning it as a modern contender in tech. Apple, continuing its streak of revenue victories, impressed even amidst slight dips in iPhone sales, proving once again that its ecosystem is a force to reckon with. If you're as hyped as I am about these developments, smash that like button, subscribe for more tech tidbits, and share this video with your crew. Don't miss out on tomorrow's episode for another deep dive into the tech world. It's going to be lit.